What stamp duty exemptions are available if you help where a chain has broken? Hi, I'm Kimberly Shackrock, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. Are you trading property? Is there some property relief that you would like to be trying to get on your stamp duty? Well, hopefully this could be a useful one to be aware of. So I'm going to throw up some information on screen, read a bit about it, and also explain this more fully for you so you've got a good understanding of when this may apply to you in your property adventure and when you may be able to use this, especially if you're looking at doing some property flips or property developments to help bring some capital into your business. So let us look at who is eligible for our acquisition by property trader from individual where a chain of transactions breaks down. So in essence, this is looking at where you've got a number of transactions, they're all fitting together in a chain, and because one of them drops out, the chain breaks, and potentially you are coming in to be a chain fixer and you're fixing the chain so that all the other persons buying and selling the property are able to actually buy and sell their property. So this is where you are a property trader and you're purchasing a dwelling. Now, dwelling in most of our circumstances here is going to be a house, a home, someone potentially who is moving out of their house to move into another one, and that person cannot now sell their house. And it's from an individual, whether that person acts alone or with other individuals. So you can't be doing this where you are buying it off a company or another entity. This is very much focused on you buying it from individuals. The purchase will be exempt from stamp duty land tax if the individual has made arrangements to sell the old house and acquire another dwelling. So if they were in the process of selling their house, they had someone lined up, everything was going through, and it's at the 11th hour or it's later in the day where something has dropped out. It is not you are the first person to go and buy that property. It has to have a legal contract in the process of being done. The arrangements to sell the old dwelling fail. So this is where we've just literally said that they are in the process and they've got contracts, everything's moving forward. Maybe the person buying, their mortgage has fallen through, so now they can't buy the property. That is now seen as a fail. The property was in the process of being sold, it is now not selling for a specific reason. And the acquisition of the old dwelling is made for the purposes of enabling the individual's acquisition of the other dwelling to proceed. So this is not where they're buying multiple properties. This is where you've probably got a family or a couple or an individual who's got a house. This is where you've got an individual or couple or family who is buying a house and selling the one that they're living in. So they're in a chain to do this, and in doing that, something has happened and now they cannot do that. So it's not someone who has the funds to buy the other house without selling their old house. This is where they need to sell the old house to buy the new house. They may have savings, let's ignore that side of things. But the key thing is they're selling to enable them to buy. And then we've also got some more conditions which need to be met. And this is the property trader makes the acquisition in the course of a business that consists of or includes acquiring dwellings from individuals in the above circumstances. So is this part of your normal trade? Is this what you do for a business? The individual occupied the old dwelling as their main or only resident at some time in the 2 years prior to the date of purchase by the property trader, and intends to occupy the other dwelling as their only or main residence. So this is very much looking at, was it their only home? Are they moving into another one, which is their only home? It is not for people who have 20 properties and they have to have lived there. So it may be that they have lived there, they're moving into the new one, whether they're moving areas, for example, they might be renting something in the area before they buy the next one, but they have to have lived in it as their main residence within 2 years. So it can't be someone who's been renting it out for a period of time, because that won't fit in with the criteria, because they won't have been living in our main residence if it had been rented for more than 2 years. So As you can see here, there's probably a little more information that you need to be gathering from the person you're purchasing if you are fixing a chain to ensure that you are ticking these boxes. The area of land acquired by the property trader does not exceed the permitted area, which tends to be half a hectare or half an acre. It's quite a big area of land. For most small properties which you might be looking at flipping, this shouldn't necessarily be a problem. Where the land acquired by the property trader is more than the permitted area, as long as the other conditions detailed above are fulfilled, partial relief may be available. So just because all of it doesn't apply, if it is a big property, it may be you still can get partial relief, which is something worth looking into. Now, the key thing is when you do get the relief, there are certain things which will remove the relief if you are not careful with what you do with that property. So it's not just a matter of what it is that you're buying and making sure that you're fitting in with the eligibility criteria. You also need to be aware of what you can do with that property once you have purchased it. Now, relief under this section is withdrawn, as you can see on screen, with spends more than the permitted amount on a refurbishment, which is the greater of 10,000 or 5% of the consideration fee, up to a maximum of 20,000. So on that basis, these are not going to be big refurb properties. These are spruce up ones, potentially buy it, tidy it up and resell. It is not these ones where you're going to be doing big extensions, big side extensions, back extensions, reconfigurations. That is not what these properties are going to be for you. If you're looking at doing that, then this exemption, this relief is not going to be available. If you're going to be going in, clearing out the property, for example, putting in new carpets, maybe painting to then resell, that is not a problem. If you are going in and going to be spending lots more money, then this is not going to be the relief to use for you. If you grant a lease or license of the old dwelling or permits any of its principals or employees or any other protected with any of its principals or employees to occupy the old dwelling. So basically, if you're going to rent it out, again, it's not going to work for you. This is very much for a buy and sell strategy, so a flip strategy, and it's for one where you're not really going to do anything. You're helping keep a chain moving, and in keeping a chain moving, they'll give you the relief available for you to then just do a potential tidy up job to make it look neat and tidy, functional, to then sell on to get your hopefully profit. And potentially it may be a way for the person who's trying to get out of that house to get the one that they want. Hopefully you've got a decent bargain for it, so you'll still make a pretty penny or at least a little bit of money on this transaction to make it happen. Whether you buy it and auction it, whether you buy it and put it back on the market straight away, these are all different options, and you need to assess the project, the property, to see what is going to be the right option for each individual circumstance to maximise any returns that you're doing for the work that you have got involved in. The key thing here is make sure you're eligible. If you are eligible, then great, you can get the relief. If not, it will be withdrawn and you'll have the stamp duty to pay. So it's just being a little careful to make sure you're ticking the boxes. And if you are, it's a great way to reduce your stamp duty. So hopefully this is just another relief that you've got in your toolbox. So as you come across different opportunities, you can pull this one out and you can look at putting in place to help just save a little bit on your stamp duty. Hopefully today you've discovered how it works with stamp duty and what happens if you can help in the situation where a chain is broken. If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel. And let's make tax less taxing.